this is Surya Saha, and welcome to the Insurtech Story Podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, and Google. Today, we will discuss on the topic navigating general insurance opportunities in Southeast Asia. And for now, I'm delighted to welcome our guest, Jyotish Parameswaran Mohini, who is the Chief Operating Officer at Young Insurance, Myanmar. Jyotish is a seasoned entrepreneur and an insurance executive with over 2 decades of experience in distribution, sales, strategy, business development, mergers and acquisitions, and digital transformation in Asia. He is recognized for results-driven style that is always focused on problem solving. Prior to Young Insurance, Jyotish was with Aviva, ING Bank, Aegis India, Fortis, and ICICI Kinfra Limited. So, Jyotish, welcome on board, and we are truly excited to have you for the show.
Hi, Surya. I'm very happy to be here too. Thank you for having me.
Would you like to tell our audiences a bit about your organization? What's your role?
Yes, thank you. Young Insurance is one of the few insurance companies that now operate in the Myanmar market. It was
Right.
licensed along with the first wave of private sector licenses. So the company has been one of the pioneers in some ways in process innovation. We are one of the first ones to be ISO certified in the market, and while we've not grown as much as some of the competition, we focused on profitability as our prime driver for a long period. So now I've been brought in recently with the intent of expanding our business substantially, as also with our foray into what we call the new age, where we're thinking about how to transform the business multifold into a digital space. And that's what we are out to do,
Right.
through which we aim to offer an exceptional customer experience to not just our end customers but also to our partners. So that's the logic of why I've been brought in, and my remit is precisely that. And here my responsibility over encompasses all of our operations.
Right. Yeah, it's interesting to see, how Insurtech is actually catching up in not just select regions in the Asia Pacific, but also, it's growing across, even in places where insurance penetration is at the minimum. So I think definitely the future is going to be interesting for insurance from now on, and of course supported by technology
So
for sure. Um, you know,
absolutely right.
Moving on to some of our discussion areas revolving the topic for the day. Southeast Asia's personal lines, property and casualty insurance market is anticipated to expand quickly through digital means, right? And that's as per various research uh, from the industry. How do you see this happening?
I think there are maybe two parts to that answer. And one is what is happening in the market,
Right.
and two is what do insurers need to do.
Yeah.
In terms of what's happening in the market, I think there are a few big trends and there are a few small trends. I
Hmm.
think the big trends, the number one of all of them is, which is sort of across all of the world, is climate change.
Yeah.
But I think there are a few others which impact these markets much more in the short run. And the first one to me is demographics. And what's happening in Southeast Asia is that 2022, around this period, right? between 2020 and 2025 is when Southeast Asia crosses this sort of imaginary line, wherein for the first time the dependency ratio increases. And this also sort of coincides with this whole question of how the economic conditions are right now. And in the next few years, the economic conditions combined with this change in demographics, wherein the people who are earning, people of earning age, need to support a group of people of either who are incapable of earning because they're too young or incapable of earning because they're too old. That happens. And as we go into the next 10 years, I think this is a factor that's going to impact Southeast Asia significantly in terms of their ability to spend, their ability to purchase assets, the way in which they behave in terms of asset ownerships and so on and so forth, and the key concerns and risks they'll need to protect themselves against. So what does that mean? To me, I think the big question is also then, are all the people who are of employable age employed? And that's going to be it's going to be a very variable answer, right? It's going to be different for different markets. A Singapore is going to be very different from a Cambodia, for that matter, or the Philippines, for that matter. So I think these are the big trends. And then there are some small trends, which are the questions around skill and education, which though is a sort of one might call it micro trend in the market, but it's got some macro impacts on things like employability. And then the small trend that I think is a very big trend actually is tech adaptation and how people are working towards various directions in these markets using tech. Now, for example, in the Philippines, the amount of screen time has increased to something like on an average about 6.5 hours, whereas you see that actually in Thailand, which you actually pointed out some time ago, there is an increasing interest in purchasing insurance online. Not so much in the Philippines. So this is the sort of behavioral differences in these markets when it comes to even something as micro as tech adaptation. The second big part of this answer is in terms of what do insurers need to do, right? So this sort of boils down into things like I look at these as some themes that insurers need to address. The first one is what I call the actuarial tables versus data science. So what is that all about? Actuarial tables are about past data analyzed, understood, and used to forecast the future outcomes. Now sort of moving towards real-time data that determines outcomes in terms of pricing, in terms of margins, in terms of expenses. So I think that is, a big thematic change that's happening, and insurers need to adapt. The second big thing is peak auto, like peak oil. And I think peak auto is around the corner as the industry is moving towards number one, electric vehicles, and number two, autonomous vehicles. So I think that's a wave to see. But luckily for autonomous vehicles, I think we may have a few years to prepare for, maybe half a decade. Electric vehicles are here, and there's a difference in how you look at the asset itself from an auto perspective. The third big question is about when you take peak auto, peak oil, etc. A comparable thing is peak ownership, which is a question of are people going to own assets or not? And this is this question about the shared economy and taking assets on rent model. This is, so from the Second World War onwards, there's been an interest in the world about acquiring retail assets at the household level. And I think that interest may wane as we move towards the future in the next few years. And that's where I call it, peak ownership. And then the question is about the climate change, which is predicting and covering climate change issues, fractional, so then that then moves towards this question of how do you actually understand this, and what is the impact of this at the retail P&C level, which is going to be an interesting question. And lastly, the question I just talked about earlier, when you talk about the peak ownership question, how do we understand the difference in the insured, which is, when assets are going to be fractional and shared, especially with the near-term tightening of Southeast Asian belts, as I call it, there's going to be this question around how will an insurer look at the insured itself, who is the insured, and how much of the policy, the asset, is owned by an insured. So these are the sort of big questions that I think insurers need to address themselves in the next few years.
Right. Yeah. You mentioned a very important point here, especially, it holds true for the insurance industry that demographics actually makes a lot of, difference the way you look at it. So actually, it primarily tells us, where we are now, where we have been, and where we are headed. And I think it's so much true for the Asian region. And countries like Thailand, India, Indonesia has the largest proportion of consumers, right, who are willing to buy insurance online. However, in the same region, countries like Malaysia are kind of a traditional in their approach. So what's your observation for other emerging economies in the Southeast Asian region?
Thanks, Surya. Very interesting question. You're right. And countries such as India, Thailand, Indonesia are the ones who are most interested in surveys to buy insurance online. What you'll be interested to know is actually that there is a slight difference between what they say in surveys and what they actually do.
Right.
I don't know if you know this. So in India, the surveys and the actual preference is not completely different.
Yeah.
But if you look at Thailand versus Malaysia, right? Thailand has about, I would say, about 44% of the customers interested in purchasing insurance online, whereas Malaysia is at about 40%. Right? So it's in terms of actual purchase relative to answering questions. But this depends on what they buy. Now, in most of these markets, travel insurance is purchased online, right? So something like 60% almost of travel insurance is being purchased this way. Or 60% of customers have purchased travel insurance in the past. So, sorry, I think this is a slightly different thing.
Yeah.
Whereas if you look at home insurance, it's something like 32, 33%. Right? So it's very different. Travel obviously is the highest purchased. Some sort of online health is also purchased a lot. But if you start looking at motor, it falls a little, and then as you go towards health, personal accident, health, home, etc., the number falls much more heavily. And actually, the number of where we're talking about agents being a more important channel is becoming more and more relevant. So that's on one side, but this is not a mutually exclusive thing. And that's the more interesting part in my view, because while agents are the drivers in some cases of the actual purchase itself, a lot of work happens online in terms of comparisons, in terms of looking at features which they're interested in, and so on and so forth. So actually, what's emerged in most of these markets, even in Malaysia, to a lesser extent, I'm only mentioning Malaysia because you mentioned it. Malaysia to a lesser extent, but in other markets, is that the impact of people, influencers in this space is increasing. So that's one big trend I see. In terms of growth, the big markets I'd watch out for Indonesia. So, India is obviously the big elephant in the room with the most growth in reality. So I'm not touching India. But I'm looking at Indonesia, which is 1.2 billion in premium in this space, roughly. I think I don't have the latest numbers. I'm guessing some of it. Philippines, I think, is a big opportunity because it's very low penetration, 0.4 billion. And I think Vietnam is a bigger opportunity because it's also got about the similar premium as Vietnam. Whereas markets like Thailand themselves are if you look at the market itself, the market is slowing down. If you look at Singapore, it's a very mature market. Malaysia is a fairly mature market. Thailand is slowing down a little bit, and so on. So while I say that across the market there is slowdown in some of these markets, I think there are very high growth pools that exist within with each of these markets, including in Singapore. So that's my take on Southeast Asia. I think the opportunity exists across all of Southeast Asia. You pointed out earlier that Southeast Asia will account for the most people who will be purchasing.
Yeah.
And so that I agree with you completely on that.
I think Southeast Asia is going to be one of the major markets, even as compared to the developing nations, and particularly driven by the demographics, as you rightly pointed out. So having discussed on all these key elements of particularly for the PNC insurance market, what are these key drivers changing the personal line insurance landscape in Southeast Asian region? Anything from your experience that you're looking at, and do you really see this to be promising for the coming years?
Yeah, actually, I would like to actually continue on the basis of what I really started this discussion about, and I think the single biggest impact I see in the immediate term, the driver I see, apart from tech adaptation. So we'll come to tech adaptation in a second, which is slightly different across different markets. Is the demographics.
Yeah.
What has happened in Southeast Asia is that as we come to the year 2020, Southeast Asia sort of peaked with its working age population, and from about 1970s, 1980s, the growth rate of the population has been falling sort of across the board. This is not true for all countries. So this is where I say that a market like Indonesia, a market like Vietnam, and a market like Philippines is slightly different compared to other markets in Southeast Asia when we talk about this. And we're not even talking about places like Cambodia, Myanmar, etc. But in the wider Southeast Asian market, the number of children is falling. But the peak of our working age population was 2020. Thereafter, it starts falling. At the same stage, the older populations, it's about 65 people, is increasing at a steady rate from here on. So until that crosses the falling child birth rate somewhere in 2050, 2055 maybe, what will happen is the working age group has to take the double whammy of having children and old people, and have to support them. And you know, the family values of Asia is such that a lot of people will take on the burden happily. Now, what happens with that, in my view, is that they will start thinking differently about. There'll be a significant stress in terms of incomes and expenditures. But on top of that, they'll start thinking about how to save. They'll start thinking about how to spend. And I think on this how to spend issue is going to be this question around assets, which will then drive P&C sales. So on one side, there's going to be this, I think, an increased need for health insurance, especially among older people, especially managed health care, all of that stuff that comes in with a slightly aging population. And on the other hand, you will see that the asset ownership will start potentially being fractional or shared in some cases. A lot of people may start moving towards smaller payments if they can. And I think insurance companies and products which are focused on pay as you use will become much more welcome than they are today. So that's how I see demographics sort of driving the P&C business in the future. The second big driver, I think, which is part of the demographics question, is migration. And Philippines.
Yeah, interesting.
And Philippines is the top migration provider in the market. There are different countries which are up there. So a lot of them have a lot of this migrational labor forces that go out. That has two impacts. And again, actually, there's a lot of intra-Southeast Asia migration that's happening from some countries to other countries. And that's having a significant impact. And I think that is an area for me to definitely focus on. I think there's a lot of sort of products and services that's required at that space. We talked about climate change earlier, but it's a very big driver. I don't want to really go into it too much, but I'm just saying that a lot of people have become more aware of climate change now than before. And I think for customers, this is getting more and more relevant than it used to be. So I'll leave it at that. We talked a bit about that already because I have a few other things to cover here. And then there's the question of skill imbalances. And in Southeast Asia, the skill imbalance story is very significant. Some of the sort of lower cost economies have also severe skill imbalances. What I call, resource intensiveness is low in some of these markets. So which means that the quality of the people you find in the market may not be up to standards with the quality of people in other markets, and therefore the income that could be earned in those markets are relatively lower than some of the other markets. So, for example, I don't want to really name countries and sort of make it look bad, but the point is that some of the countries with larger populations in the region may miss their demographic advantage for the reason that their workforce may not be able to command the global price, which is at par with the wider world. So the so-called advantages that may be realizable due to large populations may not be as forthcoming as it may appear to be. What does that mean? It means that some of these markets will remain low cost, and the insurer will need to adapt their business model. They will need to adapt their revenues, cost structures, margins, and what I call resource intensity in order to get this done. This also means that insurers will need to think about their core processes very carefully in terms of how they do business in these markets. And the last key driver is technology adaptation. And I think this is kept for the last, but it's not the least. It's one of the biggest drivers in this space. And technology adaptation across Southeast Asia is as different as Southeast Asian markets are. Very, very different. In Myanmar, you're talking about technology adaptation on one end being, people buying smuggled Chinese smartphones which come across the border, which don't have their own, Google, app store. To the other side, where people buy the latest versions of iPhones. Now, what's interesting is if you want to manufacture a mobile application for Myanmar, for your insurance company, you will have to fit not just iPhone and Android. You'd have to do a few more things if you were to make it work. The second big question is, what is really this technology adaptation? Is it really someone really knowing what they're doing? And what's happening across Southeast Asia is that while a lot of people are using different devices, using social media, their understanding of what they're doing is fairly limited. And therefore, also, what that does is it reduces their propensity to purchase anything online. A lot of people are actually quite afraid at this stage to do any financial transactions online. They just use their phones as entertainment, or sometimes, when it gets better than that, communication, but not much more than that. So it's a big question. So for Myanmar, you look at it, you say that Myanmar has got almost 100% mobile phone coverage to the market. For the population. 80% of that is smartphones. It's very impressive. However, the use of that smartphones is not linearly the same thing as people use smartphones in Singapore, Malaysia, Thailand, etc. So there's some significant disparity in technology adaptation, and therefore linear assumptions wouldn't do if you were to think about these markets. You have to think through these in a very different way.
Yeah, absolutely. I think the Generation Z has a lot of role to play in this Asian region Insurtech development, or rather, how the from the customer acquisition point, how it's going to be absorbed in the market, right? It's significantly places like, again, India, Singapore, Thailand. This is going to be very interesting in the coming days. Absolutely groundbreaking innovations happening, and I really thank you for this fantastic discussion and for sharing your thoughts today. It was a true delight to have you as our guest. And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.